Well, welcome to our first Facebook Live interview. During the next 20 minutes or so, we're going to answer two very hot topics that are relevant to expats living here in the United Arab Emirates. The first topic is going to be how can expats leave the country they're living in more financially secure than when they arrived? And the second one, which actually ties in very nicely with the first statement, is how should you go about finding a financial advisor or a wealth manager? Or perhaps you should just go down the DIY route because there are a growing number of bloggers in this part of the world. And to help me answer these topics, I'm delighted to welcome Keith Richards, a rock star in the world of financial services. So welcome, Keith. I know you've been doing a tour around the region over the last couple of days. I believe you're the CEO of the Personal Finance Society and also the Managing Director of the Chartered Insurance Institute, which, if you don't mind, I'll abbreviate to CII. And I believe you've got 127,000 members or so globally around the world. Is that correct?
Yeah, that's correct, Nigel.
Okay,
yeah,
fantastic. Okay, wonderful. That's good to know. So for those of you who don't know me, my name's Nigel Sillito. I'm the founder of Insight Discovery, and we support financial services companies around the world with insights, PR, and communications. And having been in this part of the world for some 17 years, we've conducted many research studies amongst expats and also financial advisors, and we decided it was high time that there was far more transparency and accessibility, particularly about financial advisors. So within the next couple of weeks, we're going to be launching something called whichfinancialadvisor.com. So do please continue watching our events. And we're here live in the Capital Club, which is in the hub of the financial district, the Dubai International Financial Centre. And my digital marketing gents did keep reminding me that I've got to always say, please like the button, please share, and if you can hear me loud and clear, do also hit the wow factor, the wow button. So for starters, let's start with you, Keith. What actually brings you here to the Middle East and specifically Dubai?
Yeah, well, last year we opened an office in Dubai, so the CII arrived in Dubai officially. We have members around the world, and of course I've always had members here in Dubai, with many calling on us to do more about supporting them in their ongoing continued professional development. So it's not just about qualifications, it's more these days, or as importantly these days, to keep abreast of changes in the market to ensure that the right outcomes for consumers are delivered. We're equally very honoured that we have partnered through an MOU with the Insurance Authority, where last year over 700 Emiratis went through CII qualifications. Okay. So we intend to be very active in the region, and also part of my visit this week entailed a visit to Saudi Arabia, to Riyadh, where we've now entered into an MOU with the Monetary Authority and Institute of Finance in that region, who are equally keen to increase public trust through the raising of professional standards. In fact, it's part of their vision 2020 and 2030.
That's great. Well, congratulations on that.
Thank you. Yeah.
So let's get straight to the hub of this, and that is how can expats leave the UAE or any country wealthier than when they arrived? So if you believe it's important to take advice when it comes to, let's say, saving money, managing existing investment portfolio, selecting a mortgage, or let's say taking out some life insurance, in your opinion, Keith, what are the questions that an expat should ask their financial advisor?
Yeah. So the first thing is, Nigel, is we all have a responsibility to take a level of interest and ownership in our future financial well-being. So financial planning in itself shouldn't be over complex. So the first thing that you should ask a financial advisor is, what is it exactly you can help me with? So what is your service and how much do you charge? So what you want to test is the complete transparency of how someone responds. Now, as human beings, we have to make our own decisions on pretty quickly on whether we're starting to trust how that interaction's happening. But one thing you should be confident about is advisors generally like to be questioned. They like the more questions, the more confident they start to feel that their clients are engaged in the process. So equally ask an advisor if they've got any referrals that they can make, any testimonials. Ask them how long their company has been established, how long they've been established, and as importantly, ask them why you should have trust in them. What level are they qualified for? Do they hold official, internationally recognised qualifications? And how long, how much experience have they got in giving professional advice? So never feel frightened to ask the obvious questions. And the key really is there is nothing over complex. You are dealing with someone that should be well qualified, very well experienced, absolutely intent on doing the right things for you. So don't be frightened to ask.
And I guess you want to get the opinion of several advisors. You don't want to just go on the recommendation of a friend who seems to be playing golf with his best mate who happens to be a financial advisor. You want to actually maybe sit down with, 3 or 4 to actually make a proper judgment?
I think in an ideal world you would shop around, but in practice, because it's people with people, once you engage the first advisor, many will offer their initial consultation at no charge so that you can both assess whether or not the service is appropriate. But interestingly enough, more confidence comes from asking friends if they've been dealing with an advisor for a period of time. Because once you've got a period of relationship, then you've got some degree of confidence in the output. In fact, so you can quantify the trust and the service. The challenge that we all have is the very first time you engage anyone, is everyone tends to suggest that they can do the same thing.
Yeah.
So if you can shop around and have the confidence to do that, that always makes sense. So it's a bit like building work. It's always good to get 2 or 3 quotes to do the comparison. But also, we don't always go on the cheapest. We go on the one that we feel will give us the best value. So again, that's probably worth considering if you're considering engaging professional advice.
Yeah, and someone did mention to me, and actually it's just come up on the screen now, that another good tip would be to find out how the relationship will develop, how frequently will there be communication between the customer and the advisor, because you don't want to just through online, you want to actually physically be together going through portfolios and looking at your current financial situation.
Yeah, you're absolutely right. I think it's really key that you ask what level of service ongoing the advisor is going to give you and how. But interestingly enough, actually, more and more consumers are quite comfortable with doing some interim meetings by technology. So by Facebook,
like this.
Exactly. So it doesn't always necessitate the need to always go face to face, but you can use technology now. But clearly there needs to be that interaction, and you need to understand as a consumer. So where most consumers get the maximum benefit is when they do take an active interest in their financial well-being.
Okay, so lots of probing.
Yeah. Absolutely. So these could be life-changing decisions. Advisors provide an invaluable service that could make a significant difference throughout someone's lifetime, especially those that enter into proper lifestyle planning at key points in life, understanding the need for growth and income at various stages, so whether it's for children's education or key milestones. So take an active interest and make sure that you do understand. Advisors will be delighted. So simply accepting that someone's taking the pain away of making decisions is not the right answer. So you do need to take that responsibility to be involved in decision making.
Okay, great. Well, let's move on to some research we recently did. We asked expats, almost 1,000 here in the UAE, what their impression of financial advisors was, what could be improved. And the answers came back, there needs to be more transparency on fees and commissions. There needs to be a tougher stance by local regulators, particularly when it comes to unregulated firms, which is something I keep banging on about through LinkedIn. And the third one is having industry recognised qualifications for advisors. So in your opinion, because obviously you spend a lot of time in the UK and the financial services industry there has been completely transformed over the last 5 years or so, of these 3 statements I've just made, what do you think are the priorities for this market here?
Well, all of those recommendations or key points are coming to UAE.
Mm-hmm.
So they're here in different guises at the moment, but actually it's not one over the other. They are key ingredients to driving the right set of behaviours and improving public trust. So regulatory intervention is coming.
Mm-hmm.
The market, for example, has been consulted 2 years ago on the relevance of introducing minimum qualification
Mm-hmm.
standards. If anyone thinks that that's gone to sleep or has gone on the back burner, then they will end up for a shock. So what you should be doing now, any advisor who is not appropriately qualified will end up with a bit of a shock when regulation.
Well, a comment's just come through, so I'm not going to mention the name of the individual because I actually know him, but he's actually a member of your professional body.
Yeah.
And he's saying, I'm astonished that there aren't more advisors who actually take professional membership more seriously. So, I mean, what's your answer to that?
Well, I would agree entirely, but I think we also accept that we need to do more to demonstrate the real value of being a member of a professional body. So the CII and the Personal Finance Society are already in the stage of their own evolution.
Okay.
So as one of the main professional bodies for insurance and financial services around the world, we realise that we have to evolve our role and purpose. So the qualification part is the starting bit. We need to be a lot more interactive with our members on providing support. We need to be more actively engaged with regulators and policymakers. So we need to play, I think, a more important role as the conduit ongoing in a relationship. That then becomes far more relevant. So, for example, in places like the UK, it's mandatory to be a member of a professional body because advisors not only have to be qualified, they have to hold an annual certificate.
That is not here yet, but I guess it will happen one day.
I think it's fair to say that whilst regulators don't follow each other, they all certainly talk to each other, and anything that goes in one country, the issues are similar elsewhere. So, for example, raising public trust is an issue in every country I visit. Regulators are keen to see how they can protect the public's interest, but also regulators have a role to play in inspiring public trust to engage in their financial well-being. So if all regulation does is impose rules and make it feel as if it's the wrong place to be, then actually they're going against their own role and purpose. So I think we're seeing maturity start to happen, where even the regulators here certainly are on the case. So I think what the market is aware of, certainly those that I talk to, they are expecting some slightly more rigorous and tougher regulation. My advice to the sector is, if you respond positively and proactively, then you won't be over-regulated. If you sit back and wait for the regulator to force change, then you'll end up with levels of regulation that you really wish you wouldn't have, and there are unintended consequences that come with that.
Okay, thank you. There are comments coming through, which is great. So please keep liking, please keep commenting, and don't forget the wow factor. My digital marketer insists that I mention that every 5 minutes or so. So talking about qualifications, it's obviously a great step in the right direction, but an advisor actually doing the right thing relies on more than just, let's say, initials after his name. So what should consumers look for in the right advisor?
Well, they should look for an advisor who really is committed to their best interest. So again, you should probe why things are done and how they're done. Having letters behind your name is a key starting point, but we shouldn't expect consumers to understand what they mean. I mean, if you went to a lawyer, the first question isn't can you show me your qualification portfolio? So there is an expectation, quite rightly, that consumers have that people are appropriately qualified. The important thing for an advisor to demonstrate is how they maintain their technical competence and awareness of changes in the market to ensure that they can keep abreast of advising their client or readdressing or rebalancing their portfolio or addressing other needs.
Okay, great. Well, talking about sound financial advice, obviously you can speak to relatives and friends, you can do it yourself, you can speak to these bloggers, but personally, having worked in this industry for a long time, financial services, I still think a financial advisor or a wealth manager is a really good starting point, which is why we're launching this website, Which Financial Advisor, which is certainly creating a bit of a stir in the industry, because I want to make sure that it's very difficult for expats to deal with unregulated firms. So what this website's going to do, it's only going to list firms which are regulated by, let's say, the Insurance Authority or ESCA. For those of you that aren't aware of this, there are actually 4 regulators here in the UAE, so we're going to list every single firm. We will only profile financial advisors and wealth managers who are actually a member of one of these professional bodies. And what that means is if they're a member, it's a sign that they've created a code of conduct. They have to sign up, I believe, and also they have to do, is it a minimum of 35 hours a year of professional development?
They do indeed.
Okay.
Yeah, I mean that may differ from the future regulatory requirement,
Right.
which may be somewhere more in the region of 15 hours minimum CPD. But if you're a member of the Personal Finance Society or CII, then it is a minimum of 35 hours.
Well, in actual fact, a comment's just come through. It could be from a broker or consumer. It's difficult to know. Saying, how do you actually monitor that someone's done 35 hours?
Yeah, no, it's a good question. We monitor quite rigorously, have done for many years. So what we do is we randomly sample 10% as a minimum, so it could be more than 10% of our membership on an annual basis.
Okay.
And if people are unable to satisfy us with the evidence that they've met the requirement, then we simply won't renew their membership. Now in the UK, that's even more critical for financial advisors, because if we don't issue a statement of professional standing based on the evidence that they've maintained their competence, they cannot continue to trade until they gain more.
Good. That's good to know. Let's turn to the second hot topic, which is how you should go about finding a trust advisor or wealth manager. Some of this I think we've already covered, but I think it's fair to say that financial advisors are a bit like Marmite or Vegemite if you're from, let's say, Australia, where you either love or hate them. And in the UAE, there are definitely some financial advisors who don't deserve to still practice out there. But I know that there are hundreds of really good financial advisors who do take the profession seriously and give good advice day in, day out. And let's say a member of the CII or the CISI, there are various professional bodies. So trust seems to be a bit of an issue. And we actually finished a survey just today. We interviewed 1,000 expats in partnership with YouGov. So I'd love to ask you, we had a question, who is the least respected in the UAE when it comes to occupation? So in your opinion, who do you came out as the least respected?
Well, that's interesting. I mean, in most countries, it will fall into categories such as estate agents, bankers, certainly loan sharks or consumer credit. Financial advisors, insurance companies often equally fall within low trusted sectors.
Okay, well, the result was recruiters. So I'm sorry to friends of mine who are actually in the recruitment industry, but recruiters came out worst when it came to reputation. Second worst were credit card companies, called them banks. Third worst were loan agents. Fourth worst were call centres. I'm sure if you live in Dubai or Abu Dhabi, you're fed up being pestered by call centres. Then it was estate agents, which doesn't actually surprise me too much, and then financial advisors. So there were 8 categories. So financial advisors weren't actually considered by any margin the worst, they were the 6th. So obviously there's still room for improvement, but is that kind of typical from other studies that you've seen in different parts of the world?
It is. It's very typical. I mean, in some respects, I'm pleased to see that advisors are more trusted than some other sectors, but I don't think anyone should. I think what we should take clearly from your research is there's a perception is people's realities. So for many advisors in the market, I totally agree. They absolutely get up every morning intent on doing the right thing for their customers. Sometimes the noise within the sector makes it worse because advisors are actually even less trusting of their own sector, which perpetuates the kind of noise that no one can quite work out because everyone's called a financial advisor. So I think we've got to start to pull together as a bit more of a united profession, and where we see evidence of the minority, we do need to actually report them to our regulator.
Yeah, I agree.
Because that's the way in which you engender trust in your profession. If you're a good advisor with a good reputation, you've got a good track record, you've got great testimonials, don't think that you don't need to do anything because you're part of a sector that's mistrusted. So the fact that you've got trust doesn't mean to say that that's the way people who are not your clients see you. So you're just as guilty as the rest. So we've got a perceptional issue rather than a reality. So a lot of advisors don't always address the concerns that are raised because they don't believe it applies to their firm, it applies to another one. What we have to do is accept that even the regulator finds it very difficult to separate the wheat from the chaff, to really hone in on where poor practice is evident. So if we all pull together as a professional community, we're more likely to have a more collaborative regulator because they can see we're demonstrating the right behaviours and we're addressing what to many will be a perceptual issue rather than a reality issue.
It's a good point. And the question's popped up, what percentage said financial advisors had a poor reputation? It's actually 6% versus 24% for recruiters. So I'm sorry, recruiters, but I think you need to up your game. So we've talked, I think, about what the industry can do to reduce this trust gap, and I think you make a good point. There needs to be more collaboration amongst financial advisors here actually in the UAE, and perhaps try and do a campaign together, if it could be funded, to actually look at why you should be taking independent financial advice, because this happens in the UK, doesn't it? I think
indeed.
There are trade bodies which are actually promoting independent financial advice. Is that sort of concept possible to work over here, do you think?
I think it is, although markets can be complex because it doesn't mean to say that an independent advisor will necessarily always give you a better outcome than someone who's tied to an organisation. And actually, as long as the client's best interests are taken into account and it's based on an individual basis, the issue with advice in the past has been where formulaic approaches have been taken. So treating the customer as an individual and respecting that every client is technically a vulnerable client because as the advisor you've got far more knowledge and experience than they have. So you've got to treat those people with due respect. So vulnerability isn't just about cognitive impairment or disability or age. Actually, if we treat everyone on an individual basis, we'll get it right more times than we'll get it wrong.
Okay, and another question has just popped up, but what can the local regulators do to help improve the image of the industry? Because you've been meeting some of these regulators, haven't you?
Yeah, no, indeed, and I mean the regulators are on the case here, and more will be happening, and it's quite encouraging that the Insurance Authority, for example, are leading with their own professional academy, which we're supporting. And they really are keen to see the standards raised for the benefit of the consumer. We should also understand here that there is an objective to see growth in the financial planning markets. So the market should be keen on that, but they can't gain growth if reputational challenges are not addressed. So the key is the regulator has a dual role to play here. One, it's a policeman to drive the right set of behaviours, but stick only is no good. They have a role to play in starting to engage the public to have more confidence. So your point about regulated firms, the Which Advisor Directory, are really good mechanisms to start helping consumers to have a bit more confidence to be signposted. Because clearly, where poor outcomes are evident, and certainly through supervision, then of course those advisors wouldn't be able to display themselves on there. So you know, it is important that we start to introduce mechanisms that become relevant to the consumer. Without the government or the regulator joining in to raising its profile, then actually it just won't happen. The market itself will always be seen as self-fulfilling, that they promote that they do the right things and to the high standards, but of course everyone says that.
Sure.
So I think we do need the regulator to step forward and make sure that it is operating in a more balanced dual role where to protect consumers. So we are seeing in some countries the emergence of the digital age has meant that more consumers who try to DIY actually become victim to scams much quicker and are far more vulnerable than those that are under professional advice. So it's a minority that really suffer from rogue advisors. Hopefully now that everyone's a bit more focused here, those people will be run out of town.
Yep, that's a good point. And another question has come up about how are you going to attract students, let's say young people, to this profession, to become a financial advisor?
Yeah.
Do you have experience of maybe what's happened in the UK?
We do indeed, and I think the UK is a good blueprint here, because Chartered, for example, is a recognised professional badge from consumers. So even if a consumer doesn't really understand what a chartered accountant or a chartered surveyor has gone through, what they do recognise they're well qualified professionals. We've seen a growth in the UK as the sector's professionalised, become far more transparent. It is a fee-only based environment. And what's happened is the confidence of the market has moved more towards other professional services. So chartered financial planners are seen a lot more now like a chartered accountant. So we're seeing young people graduate who want to aspire to be a professional. In the past, advice was seen as part of insurance, and it's very difficult for young people to understand what insurance is about. They aspire to be a doctor. Even banking inspires a lot of young people on financial services degrees because it's a well-paid professional role. Accountants, so if you think of the legal profession, you think of lawyers, accountancy profession, accountants. Insurance in the past has been really difficult for young people to understand a role. So although there's lots of very technical roles, extremely well paid, from underwriting to actuaries to brokers, it's difficult. Insurance just feels like a big industry or a policy or a call centre operator. So young people in the past haven't aspired to want to come into the sector, which is a different challenge we have in working with the insurance profession. But increasingly now, as financial planning and advice is professionalising, younger people are now seeing that in a similar way as joining the accountancy.
Okay, that's good. Okay, that's fantastic. Well, I really appreciate your time today, Keith. I know you are incredibly busy, so thank you. And thank you for everyone watching. Do keep the comments coming through. Remember to like, and the important wow factor, of course. We plan to do these sort of interviews from the Capital Club every 3 weeks or so, and soon we'll announce who our next VIP guest is. So thank you very much for your time. Bye-bye.